Hello everybody, welcome to the Daily Recap. My name is Pete Renzulli, Class B member, T3 Trading Group. Caught off guard a little bit today. I think a lot of people expected yesterday to be kind of profit-taking, where we would settle in today and find a little bit of a bid this morning to reestablish the uptrend, and didn't exactly have a lot of selling today, but bidding lower support areas today did not follow through for the most part. Now, taking that from a trading perspective, something that you can learn from immediately, and it was something that we had mentioned quite a bit in the mentoring today. If you did not earn money today bidding strong stocks, doing the same exact thing that you probably have done for the last 4 to 6 months, don't be looking to dump your trading strategy because one day bidding the lows didn't work. It's worked for the majority of the last 4 to 6 months. So what I was essentially mentioning to everybody in the mentoring today, and specifically in the first 90 minutes of the day today, I personally bid for a lot of stocks today. I was probably in anywhere from 8 to 12 stocks today, whatever that number was, and long, I don't know the exact number again, but it was probably 95% of the stocks today because I was looking for strong stocks to find bidders today after yesterday's selling. Traditionally, when you get a day where we pull back like that, you will find that the buyers will come back in and test. Now, the sellers or the sell short camp did not come back in a big way today as they did yesterday. However, the buyers did not step in today and say, all right, enough, when we hit the lows or we find support or any reasonable support. For example, what we might call a failed test, where we push down in the morning, rally a little bit, sell off, but don't hit that low again. You have a nice, good, excellent risk point to look to establish that long again today. We kind of just slowly drifted lower again today. So if you had a little bit of a tough day today and you did not get followed through, stick to your strategy. Stick to what normally works, what you normally do, where you feel an edge. And if today didn't follow through, I'm going to start out with looking at a chart of the VIX here before we go to the chart of the spiders. Everything technically is unfolding pretty normally. It's just that we're so used to the market having gone up for as consistently as it does. You can see that the VIX has sold off the last few months. As the VIX declines, the market will be rallying, and that's pretty true to case. Now, in the last couple of days, you see the VIX rallying and a little bit of fear coming into the market. So not exactly off the reservation as far as price action. I think we just got caught off guard. The fact that we did not hold the 21 EMA on the daily, as you can see here, which we have virtually done, not even virtually, we have done it since the end of July. Today and yesterday were the first two closes below the 21 EMA on the daily for a while. So if you were long today, if you bought stock today and it did not follow through, it doesn't mean go back to the drawing board. It just means some of your trades today didn't follow through. So again, I believe tomorrow's game plan is the same game plan as today. A little bit lower opening, a flat opening, probably still the right trade to bid. As long as you didn't get too aggressive and did not get the follow through today, you should be okay. Maybe you took a little bit of a loss. I lost a little bit of money today, but it's just a part of doing business. It's a business expense. So the spiders pulled back. I think we got a little bit deeper pullback right now. First time in a few months that we're below the 21 EMA on the daily. I'm still looking to be a buyer tomorrow morning. Okay, now if we go to a couple of the bigger stocks, we'll start out with Apple and Google and see how we fared there. Very similar to what the market did. Again, if you look at the 21 EMA, which is the red line there, this is the first time, again, since the end of July that we've closed below these levels. Now you can see here in Apple very clearly, right around the 653, 654 level is the most support. But what I'm really looking at is two different levels to watch. Here's the 50 EMA, but I'm really more watching this level here, which is 660.59. This is the real level I'm watching. I'm going to tell you why. If we draw a line across here, that is actually where buyers did something. Moving averages are where we anticipate something happening. Support and resistance on the chart where this candlestick price action, the higher the low, that is where buyers or sellers did something. So again, this level here at 650, basically around 659, right in that area there, 656, I'm sorry. That's the area I'm looking for support. So roughly $9 from where we closed today, but not too far off of today's low. So Apple, I'm looking in that level, and that would be where I will be teaching guys tomorrow and girls in the mentoring room to look at. Google actually still fared a little bit better. The one thing that we have been calling out, though, is when you get a significant push to the upside, lack of price movement and increased volume, which you can very, very clearly see here on the lows, okay, on the low of the chart here, That more often than not is distribution. And what that simply tells you is that institutions are probably liquidating the position that they built along this way. And every reason in the world, too. It's a $200 move in 7 weeks, okay? Think about if you were in that position. So you start to see new highs, you start to see lack of price advancement. So we're creating new highs, but we're not really going anywhere by the end of the day, but a significant increase in volume. If I was long Google from lower levels, which you can see here, it's comfortably above the 21 the entire time, now comfortably above the 8. I would be tightening up, if not trailing a little bit. And something right out of the active trading course, you can see that we have a topping tail there and a pivot high form there. Two very distinct entry tactics that we use. If this was a downtrend and a lower time frame, that would actually be a sell short signal. But in the case that this is actually an uptrend, it would be a signal for us to be tightening up our trailing stop. So not only the patterns to look for tomorrow, but also trade management. Trade management is really where the real money is made or lost, is actually how you manage the position. So if you have a good profit from lower levels, I personally would be tightening up my trailing stop up in that area. Got caught a little bit on the financials here again myself. I had Citigroup looking for it to hold the bid around that 32.50 level. You can see it actually punctured that, went down to around 32.50, formed a doji. Same thing with Goldman. If you remember this morning in the morning call, we had mentioned Goldman was a 50% retracement from this move on the breakout here up to here, which was basically around 113.50 for the 50% level. We pushed through that pretty decent on an intraday basis. If I can just go to the intraday chart here, and you can see I was looking right around this level here. We actually opened there, pushed through by $1.50, and then actually ended up hitting that level as resistance. So we did not get the push down. And you see here technically bottoming tails. That's where strong stocks would expect them to start to push up, and actually it didn't happen. So as long as you kept your share size reasonable today and didn't get the follow through, you didn't get hurt that much. One other sector we're watching quite a bit roll over now after making new highs in that gap up, which a lot of people call an island gap, where we gapped up and just started to roll over since then. Schlumberger, BHI. BHI looks a little bit weaker there, bigger market cap there as well. And Halliburton, I dipped my toes in there a couple of times. You can see it found support right around the 50, did not hold the 50, did hold the 200. So again, I will be looking to bid that right around yesterday's low and the multiple moving averages tomorrow as well. Moving along, we have MetLife finally breaking down. We actually had mentioned this morning where we were talking about it's in this range and it's just not getting out of the range. So 34 to 36, that is technically the range. Now we're at the bottom of the range and we're sitting at the 50 EMA. We're starting to see a lot of these big cap stocks fail on the breakouts, such as AET, which we noticed yesterday, and we had talked about that this morning as well. Moving along, Caterpillar. We had mentioned that this was a very obvious range between 82 and 92. Looked a little promising here, and we finally pushed above the 92, but we haven't been able to stay above the 200. So we had a gap up above the 200, stayed there for about a week. I actually was looking to game plan long above 92. The longer it stayed up there, 5 days, 6 days, pretty consistent, didn't hold. So now we pulled back. Now the bet's off. We're right in the middle of this trading range again. Deere, I liked a lot over 82, 83. Again, you can very clearly see if you wipe out the moving averages, top of the range, another stock that failed at the highs. So we have the market rolling over, we have some indexes rolling over, varied indexes rolling over, and we have a lot of big cap stocks not following through on the breakouts. And again, we can go to Home Depot, one that we mentioned again this morning. We had said this very clearly this morning. For the last 6 to 7 days, we're seeing a lot of indecision where we're opening and closing at basically the same spot or selling. So we're not seeing the same tape. Now, from a price persistency perspective, that's a lot to say at one time. Price persistency perspective. We're still closing above the 80 EMA on Home Depot. However, you have to recognize that we're opening and closing for the most part in the same spot, which means intraday we're not getting any follow through, or we're seeing that we're closing below the open or at near the lows. So we're not, even though we're above the 80 EMA there, the story's changing a little bit. So basically what it'll be telling you is you're not quite hitting the bid yet, but your alarm is definitely sounding that something different's going on in what has been a very significant push up for the last 12 months in the stock. Last, we're going to finish up with Visa, another stock that pushed up to a new level. We were looking to see hold, that did not. And MasterCard, same thing. So again, we don't want to make too much out of just a couple of stocks rolling over. However, this is getting to be it's more than just a couple of stocks. Now, that being said, from a trading perspective, everything I just said about stocks rolling over and the bigger caps not following through on breakouts, we're still in a 4 to 6 month uptrend. The majority of stocks are barely now, first time, breaking their 21 EMA, which is a normal, healthy pullback. I went long most of my trades today, if not 95% of them. I will be looking to do that again tomorrow. Strong stock pullback, look for yesterday's low to be bidding into. If you get a gap down, look for the first sign of support. What's key here is first the stock is strong, then you look for a tactic to enter. If you choose to short sell a strong stock, you must go into that stock knowing it's going to be a momentum type trade, which means quicker entry, quicker exit, and hit the gates as soon as the stock's not working out. So you have to quantify your strategic plays as this is an A trade, a strong stock I want to buy versus it's a strong stock that's trending down today and or yesterday, and I recognize I'm trading against what would be my core strategy. So immediately trade management, that has to be a quicker trade. So you book the profits quicker and you don't give it as much wiggle room. Stocks that are in the direction of your higher time frames absolutely can do that because you're with all of the order flow from the institutions that are creating that trend in the first place. So overall, not a lot of price action intraday. There were some stocks that had decent intraday range, but for the most part, not really a day that you would size up. So I'm going to leave it with this. As you're trading, or as you're learning to push yourself out into the next level or the next milestone in your trading career, make sure you can make that distinction between a day where you got them and it's a good A-trade scenario versus a day where you're just not comfortable, where you put the trade on it and it's quickly moving against you, where on good days that doesn't happen. Recognize that, pull yourself back a little bit. Nothing wrong with taking a loss, nothing wrong with taking a loss on part of the position, and then the rest of it if it doesn't work out. Usually in this type of tape, you're going to end up being put on a position, doesn't work out, scale out of some of it. If it does hold, you put those shares back on. If that second piece that you scaled out of doesn't work out in there, you just kind of like taking paper cuts. So on a day like this, if it's not your A scenario, we're not getting the green candles, for example, in the long to the trades to the upside, nothing wrong with having a losing day, doing what you're supposed to. And that's kind of the day that I had today. I'm trading with you guys. I'm right in there with you. So lost a little bit of money today, but I would take every single trade again that I took today. And that's what you should be striving to in your trading. You want to get to the point that I say, made or lose money, I traded well today. Money comes from making good decisions on a strategy you believe in. And that's what we teach here at T3 Live, and especially in the mentoring. So if you don't have your own strategy, absolutely want to join us, especially for the Super Conference in October in 2 weeks on a Saturday. Hope you get to spend 2 days with us. Have a great night. We will see you tomorrow.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.